Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries behind those dusty corporate filings. And today, we're diving into a report that reads like a phoenix rising from the ashes of bankruptcy. We're relooking at Wolfspeed Incorporated S-Form 8K, and let me tell you, this is your typical quarterly update. It is a story of a company that went through Chapter 11 bankruptcy proceedings and is now emerging with a whole new structure for its shareholders. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below. Now, let's get into this. This report is dated the 29th of September 2025, and it marks a turning point for Wolfspeed. As most of you probably know, companies file these reports to tell us what is going on, especially when something significant happens. And trust me, what happened here is significant. Wolfspeed Incorporated is a company that produces semiconductor solutions, particularly for things like electric vehicles and renewable energy. Think of them as making the chips that power a lot of the advanced technology we see today. They're incorporated in Delaware, and this filing details a major shift in their ownership structure, all stemming from a difficult period they've been through. Their common stock is traded on the New York Stock Exchange under the ticker symbol WOLF. This means that whatever happens with their shares directly impacts investors on the public market. Now, Wolfspeed is not electing to be treated as an emerging growth company here, which means they are likely past that initial startup phase and are operating under the full scrutiny of regulations for more established businesses. The really crucial background here is that on the 30th of June 2025, Wolfspeed and a subsidiary voluntarily filed for Chapter 11 bankruptcy. This is basically a way for companies to restructure their debts and operations while still operating. They were trying to implement a prepackaged plan of reorganization. This means they kind of worked out a deal with their creditors beforehand. And the big news in this report is that on the 8th of September 2025, that court-approved reorganization plan was officially confirmed. This is like getting the green light to rebuild after a storm. Think of it as passing the most important exam after a tough period. So, what does this court confirmation actually mean for the people who own shares of Wolfspeed? This is where it gets really interesting, and for shareholders it is a mixed bag. On the 29th of September 2025, a date that should be etched in the minds of Wolfspeed investors, all their old shares were cancelled. Gone poof, and in their place existing shareholders received a very, very small portion of new shares. We're talking about holding just about 0.008352 new shares for every old share you had. This is a massive dilution. Imagine having 100 shares and now you have less than one new share. This is a significant haircut for anyone who was holding the stock before this reorganization. But there is a glimmer of hope, a conditional upside. If Wolfspeed hits certain regulatory goals before a specific date, called the regulatory trigger deadline, then existing shareholders will get a little bit more. They could receive an additional fraction of a share, specifically 0.005568 for each old share. This adds a bit of complexity because it is not a certainty, it is a bonus round dependent on the company meeting specific targets. So, if all those milestones are met, shareholders could end up with a total of about 0.01392 new shares for every old share they had. Still a tiny fraction, but it is structured to reward the company for successful navigation of its post-bankruptcy landscape. On the flip side, if those regulatory hurdles aren't cleared in time, then the shareholders get nothing extra. This essentially means the original, very small distribution is all shareholders will see. It is a clear incentive for Wolfspeed to perform and meet those targets. Wolfspeed Inc. This filing is all about the tail end of a major financial restructuring. What we're seeing are the nuts and bolts of how a company emerges from bankruptcy and what it means for existing shareholders. It is not about new product launches or quarterly earnings growth in the traditional sense, but about the fundamental change in the company's capital structure. By FUM to Melissa Garrett, the report is signed by Melissa Garrett, the Senior Vice President and General Counsel, indicating that this is a formal, legally binding update on the company's status. Date, the 29th of September 2025. And again, this all happened on the 29th of September 2025. So what is the story here? Wolfspeed went through a rough patch and used bankruptcy as a tool to reorganize. This filing confirms that the reorganization plan has been approved by the court. For existing shareholders, it is a tough pill to swallow. Their ownership has been drastically reduced. Think of it like this: if you owned a whole pizza and now you only get a tiny sliver, but there is a chance you might get a slightly larger sliver if the chef in the next hour makes a great dessert. The company is betting on its future success to make up for the past. They are resetting their financial obligations and essentially giving new life to the company, but it comes at a significant cost to those who held shares before the bankruptcy. The key takeaway is that this is about immediate financial performance in terms of revenue or profit from operations, but about financial survival and a path forward. The big risk is whether Wolfspeed can actually achieve those regulatory milestones to give shareholders that bit of extra upside. If they don't, it is a reminder that in a bankruptcy, common shareholders are often the last in line to get paid or recover value, and they bear the brunt of the restructuring. The opportunity for the company is a clean slate, allowing them to focus on their core business of making advanced semiconductors without the crushing weight of old debt. Now, looking at this filing, my take is that Wolfspeed clearly needed this restructuring. The fact that they achieved a prepackaged plan means they had pretty solid creditor support, which is a good sign. However, the massive dilution for existing shareholders is a harsh reality. They effectively wiped the deck clean, and now the real test is whether the new Wolfspeed can execute and deliver on its promises, both operationally and in meeting those crucial regulatory milestones. It's a speculative situation for shareholders now, with a potential upside tied to performance, but with a very diluted starting point. Alright, that is our breakdown of Wolfspeed, its latest filing. What is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.